Hi, I'm Tanya Kerr, and this is Russ Phillips with the T. Kerr Property Group and the Russ Phillips team, and we have some exciting real estate developments to share with you today, don't we?
Yes, for the first time this year, dating all the way back to December, the Fed cut the interest rate. We've been waiting for this for months and months. It dropped by 0.25, so quarter point. Now the federal borrowing rate is between 4 and 4.25.
Right, but that doesn't necessarily mean the mortgage rate.
If only.
Yeah, that would be exciting news. So what does this mean on a national level? The Fed's cut signals concerns about slowing job growth and weakening labor markets.
Inflation is still above the 2% goal, but now they're more focused on supporting employment as top priority.
And here's the key. The Fed is signaling that more rate cuts are on the horizon.
That's right. There's 2 more Fed meetings this year in November and December, and there's lots of discussion that there'll be a rate cut in each one.
It's fantastic news. The Fed's dot plot, basically their forecast chart, shows the 2 rate cuts right here.
And there's been a lot of pressure from the White House on the Fed to cut rates because they are heavily focused on job growth and inflation. And frankly, they feel like the lack of a rate cut has crippled the economy. Now let's bring that closer to the Central Texas market. Even though the Fed has cut their rates, that doesn't necessarily impact mortgage rates immediately. The two are highly related, but most lenders have already priced in today's rate cut.
That's right.
And with the anticipation of future rate cuts, a lot of the pricing is already reflecting that. We're going to see, if anything, more of a gradual, slow pace downward.
Yeah. Now, rate cuts impact affordability for those who are purchasing. So, for example, if you were to purchase a home with a 1% rate cut, it means that you would have 12% more purchasing power.
With the same payment.
With the same payment. So essentially, this rate cut of 0.25 means that you can afford 3% more home for the same payment.
The same monthly payment. That's what affordability is all about.
That's right.
So here's another potential impact. Those who have not moved because they love their current interest rate may be looking at refinancing or recognizing, hey, you know what, now the numbers are such that I can move, which could have the added impact of increasing inventory that's currently available.
As a matter of fact, yesterday I had a lender reach out to me and say it makes sense for this one person, a mutual client, to refinance. So we're going to see refinancing on the horizon. So here's what we think we're going to see in Austin, Georgetown, Round Rock, Leander, Liberty Hill, Cedar Park, and Hutto. Now what we expect is that this rate cut may impact demand, but I wouldn't expect to see a major impact right away.
That's right. Typically when the market finds its bottom, it takes about 60 to 90 days before buyers really recognize, hey, something's different. When it does take off, it's probably going to lead to more gradual appreciation. I don't think we're going to see the craziness that we saw back in 21 and 22.
I agree.
So one aspect of the market that we expect to change is with the rate cut, we could see more first-time home buyers in that lower tier price range entering, which will increase demand and put more pressure on current inventory.
That's right. It's not just about the rate, but it's also about the consumer sentiment. Yeah.
Looking ahead, here's a few things to keep your eyes on. There is a lot of anticipation that the Fed may have up to 2 more rate reductions this year. That'll make 3 total.
That's right. And while mortgage rates may go down and that may impact buyer demand, we need to keep our eyes on inflation, because if inflationary pressures continue to exist, then
that's going to make the Fed pucker again. So Tanya, we also have to watch the job market too, because the lower interest rates could, in theory, increase demand as more buyers find that things are more affordable. But if the job market continues to weaken, that could offset the demand.
That's right. So in short, the rate cuts are great news. It's going to relieve some pressure on buyers, and it's going to get the real estate market moving just a little bit faster, but don't expect any crazy rapid changes in the short term.
So if you're thinking about buying or selling or refinancing or investing, it's really time to start those conversations again as we watch things closely. And keep in mind too, mortgage rates are based upon what lenders think is going to happen.
That's right.
So we don't necessarily need to wait for November because the pricing reflects what they think is coming.
That's right. We've had rates anticipating this rate cut for over a month. Thanks for watching, and if you like this, please like, subscribe, or drop a comment below, and we are always here to be a real estate resource for you.
And we'll be keeping an eye on the market changes and updating you on what they mean for you and for our market.